Talked to somebody yesterday and he asked me, or maybe it was 2 days ago, he asked me, he said, hey man, you still think that gap's going to fill? And here's exactly what I told him. I said, as long as we do not daily close above $44,000. And now look, I don't know what time we closed. Maybe we technically closed above 44 yesterday. I don't know. But until we get that and hold it, because we would have lost it just a couple hours later. I want everybody to understand this about the daily close time. The daily close is a UTC. I guess it's midnight at UTC, which is like the universal zero line for time. Okay. Sometimes in the United States, that time comes in, I think at like 7 p.m. and then if you're on the East Coast, 7 p.m. and then once the other, whether it's daylight saving time or the other one kicks in, then it's 8 p.m. maybe. It rotates 1 hour. But a daily close, and there's usually a lot of action around the daily close because the daily close, what it will do is it will set the basis for the next candle, right? So in crypto, it's much bigger on the weekly or the monthly, but even on the daily chart, a situation like this where you have Bitcoin that runs above 44K very briefly and then runs back down. However, if it does it around the daily close, all the chart remembers is that daily close, right? So it didn't matter if it was below 43 all day and then for 1 minute flashed above 44 and then flashed right back down. If it does it at the daily close, then that's all the chart's going to remember, and that's how people are going to chart with it because they're not going to remember that specific instance of how that occurred. If you want to break it down further, you can look at the 4-hour chart and figure out exactly what went wrong or what happened. But the point is this: sometimes you just have price action that occurs around the close. And so when I say closes above 44K, it's got to be significantly above 44K or at least hold it for a candle or two. And then it could have a retrace and bounce back and that will be fine. But right now, until we get above 44K and hold and do not get straight up rejected, I'm still going to believe that we're most likely going to fill that gap. Was I nervous yesterday? Yes. Now look, guys, hear me out. When I say I'm nervous, what do I mean? Because I don't mean I'm nervous. What I mean is I predicted that I believe most likely we will fill that gap because that's what history says. And I think there's a good chance that we do it. And so when I say nervous, I just mean like, sometimes I like to be correct about things. I like to be correct. And if it gets above 44, I think it's going to invalidate that if it holds it. So this is a very key moment for Bitcoin's trajectory because right now we're determining whether Bitcoin's going to run through Christmas or maybe retrace through Christmas. When the altcoins are moving, you're having a lot of great altcoin movement, which we're going to look at here in a moment, which is really, really cool. But Bitcoin right now is kind of sitting still. And I think that what we could see is we could potentially see Bitcoin maybe stay stagnant through the rest of the year. And altcoins really, really rip and run. The Ben Armstrong Crypto Experience is powered by Stake. You like digital tokens? Can't tell. You like being social, right? Then you need Crypto to make your way over to Stake, a social casino where you can purchase gold coins to use across their wide assortment of games. If you've got any friends to play, there's a social aspect. We got a link on the screen, Big Van Vader on the ground, QR code, scan it, click it, bop it, boop it, go play some games at Stake. So thank you to Stake. The Armstrong Crypto Experience is powered by Stake. So to see what we're talking about here with the CME charts, okay, you have to understand what CME is. Chicago Mercantile Exchange. This is very similar to the CBOE, which is Chicago Board of Options and Exchanges. These are basically institutional investment vehicles. And CME allows derivatives and futures trading, and they offer Bitcoin futures settled in, I believe these are settled in paper. These are not, I don't think this is spot. I think this is derivative futures. But yeah, of course, there are futures here, so they're not spot, of course. That's what I meant to say. So what you have to do is you have to click on the daily chart because the CME is an institution. And what happens is sometimes you will get these gaps and you get this gap right here. And this is the gap that we've been talking about. Most of these gaps, they're always going to occur on the weekends because the traditional vehicle is closed from like, I think it's like dinner on Friday to like the afternoon on Sunday, I think is what it is, if I remember correctly. And so because it actually has a close, this is crypto, right? Crypto doesn't close, but the investment vehicles do. So for the time that the doors are closed and they're not operating, that's when you get these gaps created. Because let's say Bitcoin goes up to 39,000, okay, and it stops on Friday. Over the weekend, it keeps pumping. On Sunday afternoon, it's 42,000. Boom, this is where the next candle starts. So you've got this gap right here, and that's what you're looking at on the screen, what I've circled in yellow. And that gap is at $39,600. And you can see right now, it looks like if I were a betting man, I still think it's gonna fill. Because I mean, look, it's heading downwards. And you can look here and you can say, okay, you got this here, and then you got a higher low. Okay, but then you got a lower low, okay? So right now, to me, until we get above 44 and hold, and look, these are very bearish wicks here. What these wicks mean is that we've tried to get above these prices and it just got freaking pushed down immediately. Whenever you see big wicks, in general, those are bearish. Now, not always. You can look back here and you see where in the short term, it wasn't bearish, but then it did go down. And so for us, what we're looking here is to see this fill. And you can look back in the history of this chart, and you can see that all these gaps are filled. Oh, so over here, this one here got filled. That's filled right there. Boom. That one filled. 2022. This one? Come show me. This one's filled. This one? Well, yeah, but it filled on the upside over here. It filled over here. Yeah, it filled. This is what we mean, guys. This was unfilled. Boom, filled. Actually, it got filled right here, actually. Now, look, we always believe that the ones on the upside, if it's on the upside, they're always going to fill. So I don't think we have a big one to the upside, really, if I'm looking here. But those are almost always going to fill. The ones on the bottom side, they fill over 90% of the time. 90%. So because of that, we believe that they're going to fill most of the time. And you can look here. Here's a great example of one. Here's a great example of when we just saw this in action. Okay. We just saw this back on the weekend, beginning of this year. Okay. The beginning of the year, you had this gap and then started running away and it was getting ready to pump, but it had to come down here and fill it. Because what happens is these institutions have these buy orders and those buy orders don't get hit because of these gaps. And they have a certain like budget or trajectory for the way that they're calculating their money, and they need that filled. And so they will apply negative pressure on the market to push it down to fill that space. But they don't fill 100% of the time. If I remember correctly, I believe that we still actually have some of these back here at right now. We have a gap here still. Back at 27,000. No, this is 2021, so we already filled that. No, that's incorrect. I'm looking for numbers lower. I think we've got one around 9,000 if I remember correctly. No, that one went all the way down to.
Could you imagine getting $9,000 Bitcoin?
Fill that. Yeah, we don't have a freaking gap. I don't think. I think there's a tiny one somewhere, but I don't see it. Oh, here it is. Is that it right there? Look at that. Yep, because I thought it was a 9,000. I thought it was around $9,000. There it is. It's sneaky. It's really freaking sneaky. There's one. Is that's close. Okay, let's see. So what is the is there a gap? But no, I don't think there is. Yeah, there is. Tiniest of all tiny gaps right there. There is a baby one right there. And right here. Yeah, this one. This is one around 9,000. It's right between. Now, so here's a prime example of two. And this one really people don't talk about it. It's only $100 or whatever. This one is a significant one. And the fact is that we don't believe this is really going to ever go down there and fill. But when you were in the bear market and people were talking about low prices, this was a good target because this gap existed and they act like magnets. There you go. Some gaps never get filled, but 90% plus of them do fill. So keep that in mind. It's very important as we're trying to figure out what's going to go, because right now we do have a gap at $39,600. And you can look and see you can see it tried to fill. Look here and you can see where it tried to fill. So even when they try to fill, it doesn't mean they're always going to get there. And right now it is trying and things like that.